Good morning, Trinidad and Tobago, and welcome to the Bourse Report. Today we're taking a look at Sagicor Financial Corporation's full year earnings for the year ended 2017, as well as One Caribbean Media's full year earnings for 2017. Both stocks would have had different fortunes throughout the year, with Sagicor reporting an increase in earnings, while OCM recorded a second consecutive year of declining earnings. Let's turn first to Sagicor Financial Corporation. And for the year ended December 2017, Sagicor reported an earnings per share figure in TT equivalent of $1.35 per share. That's fully diluted earnings per share from continuing operations, a 6.4% increase from the $1.27 reported in the prior comparable period of 2016. A couple of notable performances. One, total revenue improved significantly, around 7.6% increase from $7.7 billion TT equivalent to just around $8.3 billion. And income before tax, however, declined just around 17% from $1 billion TT equivalent to just around $840 million. Now, taxation expenses declined very sharply, around 55% or cut in half, and much of this was attributable to the implementation of the Tax Cuts and Jobs Act, which was implemented or came into effect in 2017 in the US, where Sagicor does have significant operations. All of that redounded to the benefit of shareholders, as well as a positive development in the discontinued operations related to its now disposed of UK operations, which also contributed just around $68 million to profits before tax, or profits after tax rather, leading to net income attributable to common shareholders increasing just around 3% from $408 million to around $421 million. Now, in terms of Sagicor's revenue by source, there has been a nice measured upward trend over the past 4 years, as we can see in this next graph. In 2017, net premium revenues were just over $5 billion TT equivalent, which is just around a 12% increase from the 2016 financial year results. Net investment and other income also increased just around 7%, moving from $2.3 billion TT equivalent to just around $2.6 billion TT equivalent. And much of that improvement in net investment and other income would have been driven by significant and measured increases in realized gains over the past several years for Sagicor. Overall, Sagicor's earnings trajectory remains quite positive over the past 5 years. Fully diluted earnings per share attributable to common shareholders has increased from just around 83 cents by about 63% to its current level of $1.35. Dividends per share has also increased, but somewhat lesser extent, from just around 27 cents per share TT equivalent to just around 34 cents per share, or around a 26% increase. At its current price of just around $7.80, Sagicor trades at a price earnings multiple of around 5.8 times and offers investors a pretty attractive dividend yield of 4.3%. The price earnings multiple of 5.8 times is well below the sector average, of which is around 12 times, and its trailing dividend yield of around 4.3% is also above the sector average of just around 3.2%. So on the basis of its measured continued growth, its relatively attractive valuations, and also that Sagicor reports in US dollars, which provides somewhat of an implicit hedge to TT dollar investors, Bourse maintains its buy rating on Sagicor. Turning quickly to OCM, not a good year for the company. OCM reported earnings per share of just around 69 cents, which was a 16% decline from the 2016 result of just around 82 cents per share. Revenues dipped just around 5.2% from $466 to $442 million, and gross profits also declined just around 13% from $182 to $158 million. Profit after taxes overall declined by just around 16.3% from $86.6 to $72.5 million. And as we can see, OCM, like other major media houses, continues to be affected by changing trends in how persons consume media, as well as adverse economic conditions across most of its operating jurisdictions. And as we can see, profit before taxes in the orange column after being relatively stable over 2013 to 2015 period, would have declined significantly in 2016 and 2017. Firstly to 86.5 million and then to its current $72.19 million. And profitability has also been challenged, with its profit before tax margin also coming under some pressure. After averaging just around 20%, has now fallen off to just around 16.3%. At the current price of just around $12.43, OCM is trading at a price earnings multiple of 18 times, which is well below the sector average of just around 31 times. This would have come about largely as due to price adjustments in the stock price over the past few months, where it would have fallen 34% over the period 2017 and has retreated around 4.8% for the year-to-date period in 2018. OCM does offer investors an attractive dividend yield of just around 5.4% when compared to the sector average of around 4.2%. And on this basis, because of the significant price correction, but again, with the knowledge of the continuing challenging economic conditions, Bourse Bourse actually changes its rating on OCM from a sell to neutral. That's it for this week's edition. For more information, give us a call at 226-8773, email us at invest@boursefinancial.com, or check out our website at bourseinvestment.com. Have yourselves a great investing week. This has been the Bourse Report.